dimension.
Good morning and welcome to the Trade Setup right here on BloombergQuint, and we are staring at a completely different market scenario than what we were Thursday morning when we last traded. I mean, the last day that we traded. It was all looking hunky-dory. For now, it's all looking very, very fragile. And I'll tell you the reasons why this is happening and a lot of things surrounding this. So first, the international news. And there are lots that's happened, but the one key thing that I think from market's perspective is impacting, aside of all the other factors, is, are we looking at a resumption of the trade war in any fashion whatsoever? Donald Trump threatened new tariffs on China over the coronavirus pandemic. This happened on Thursday, by the way, and it spooked the world markets on Friday. And it is spooking Asia today, and I'll get to that too. But Donald Trump is saying that the phase one trade deal signed between the US and China was now of secondary importance. So essentially, Bob's now getting even more serious. They're not just talks. I mean, there is probably some signs of there being intent of some bit of a trade war resuming. Now that led to the US markets, as I said, lower. Asia is starting off lower. SGX Nifty has this huge cash to itself in the session, and it brings forth the risks of trying to carry home overnight positions if you're just looking at charts, because that's what most people did in Friday's session, and I think that would now prove to be foolhardy. I'm not saying the markets will stay lower. They could get down lower as well. Difficult to call it. I'll just try and give my two bits in a moment from now, but just shows the risks, how risks are when it comes to trading overnight, especially in the markets like this. So we're looking at a start which is going to be very, very weak. Some India data points which might also be contributing. So one, key results post-market are disappointed, and I'll get to that, but Reliance, Tech Mahindra, HUL, some of the others did not do well. Government has deferred the release of the April GST revenue collection data, but mind you, the states, the 2 or 3 states which media has reported the data of, have seen a substantial fall in GST revenues. One of the media houses, I think CNBC, pointed out towards the April collections for the nation at 28,000 crores too. I know there is a bit of a deferment, and therefore these numbers shouldn't be looked in an ideal scenario, but the numbers look bad for the states that have been delivered as well. The lockdown easing begins from today, and that should probably be one positive sign. I know the headline number is that the larger lockdown stays till 17th, but I think what we've seen is that a significant relaxation measures have come in, and maybe that augurs well for the economy, though I shudder to think what would happen if indeed the number of cases spiral out of control. One just hopes that that doesn't happen. Just one quick follow-up there. PTI put out this story about how CII did a CEO survey, and with that survey shows that more than 65% of the firms expected revenues to fall by more than 40% in the April to June quarter. And therefore, we are right now looking at the Jan to March quarter reportage, but come July, when we look at April to June, it will not be a pretty picture. 40% jump in revenues for most firms. That's telling, really. And that's at least, by the way. Now, what does all of this indicate for the markets? I think I just want to leave you with one chart. Frankly, I don't want to talk too much about positions, etc. We're at the start of a new series and all of that. But this chart on the Nifty will show you how at about 9970 levels for the Nifty, that was a completion of the 50% retracement. We didn't quite go there, but we are about 48-49% of the retracement of the fall. We fell from nearly 12,000, 12,400, whatever you call it, to about 7,500 odd. From there has been a 50% retracement, and typically in technical parlance, from 50% retracement levels, markets tend to give way again. We're starting off lower. Could this be a start of something more serious? That's the question. And the one thing that you got to keep in mind, that FI outflow slowed a little bit, not just for India, for the world at large. The April outflows were just over 6,000 crores, I think 6,400 crores or thereabout, versus 65,000 crores in the month of March. So nearly 10% of what the March outflows were. If indeed flows stay benign, then we might actually be looking at some bit of containment of this. So let's see. Again, I repeat, this is a sharp fall. I'm not saying this is doomsday, but we are starting off lower. We may head lower as well. I think it'll be important to figure out what experts say. The biggest problem to my mind is this, the results. HUL. These are the stocks to watch, by the way. HUL, volume growth at -7%, which was way below estimates. The range was 4% to -4%. Forget the estimates, just the absolute number, 7%, was very weak. Management commentary, cautious in the near term, optimistic in certain pockets, but cautious at large. The overhang of the GSK share sale may continue weighing in on the stock as well. I dare say, watch out for HUL even after the gap down today. Watch out for the other FMCG names. Tech Mahindra profit fell more than expected. The margins narrowed very, very sharply. The brokerages find comfort in valuations, and the consensus target is still above the current market price. But I don't know if that is any solace. I would reckon that the stock should start weak today. Remember, it is a bit of short covering in Thursday's session. It went up higher. I would reckon it'll get corrected in the session today. Reliance Industries, the PAT was below estimates due to the one-time cost. The rights issue pricing is above what people were estimating, and therefore that's not comforting. But the good part for Reliance is that they're saying that the Aramco due diligence is on course. Remember, BloombergQuint has this story about how is that 10% further sale coming in the other platforms as well, aside of the Facebook deal. Net debt company reiteration very, very shortly by Reliance. So it's positive news flow. But the stock had run up so much that there might be a bit of a correction on the results as well as on the fact that the market is starting off lower. So be mindful of that. If you're bullish on Reliance, you'll get a chance to buy today, tomorrow, over the next few days. I don't know. But today, it's certainly start of week. And watch out for the aviation companies. No connection per se, but if Warren Buffett is skeptical about the airline model, even though it's the US model, I would guess that it might show up on the Indian companies' pressure as well. Remember, ATF prices have been cut. But that has no meaning because airlines are not flying right now. The key is Warren Buffett has revealed that he's sold off the entire stake in the US aviation companies, 4 aviation companies that he owns. He sold off the stake in all of them because he believes the business has changed materially and therefore it doesn't merit owning. So unfortunately, it might weigh in on the Indian companies as well today. Last but not the least, speaking of Buffett, I want to leave you with the Buffett code. Mind you, these are the 4 most important names. There are some others like Laurus Labs, etc. also that you should keep an eye out for. But I've highlighted the 4 most important names according to me. I'll leave you with the quote from the great man. He says that we've not done anything which is buying in the fall because we do not see anything that is attractive to do. But it may change very, very quickly. And he reiterates that we were not buying things in 2008-9 because we wanted to make a statement to the world, but because it seemed an intelligent thing to do, which means that in the fall that came by in the world markets, Warren Buffett did not think it was intelligent enough to buy. He doesn't trade it per se. You largely invest, and therefore his view should be taken in that fashion. But we'll start off lower today, so brace for impact. Thanks so much for tuning in.